Hello, and welcome to the Three Questions Podcast, where we dive deep into the world of wealth management and connect you with industry experts. I'm your host, Wayne Baxter, Senior Executive Manager at One Capital Management. Are you or someone close to you a Canadian resident who's considering purchasing life insurance for a beneficiary who's a U.S. citizen? If so, you're not going to want to miss today's episode. We're going to address the three questions cross-border families should ask before purchasing Canadian-based life insurance policies. Thank you for taking time to check us out. And if you enjoy this episode of Three Questions Podcast, please consider liking this video and subscribing to our podcast and YouTube channels. In the third installment of a three-part tax planning series, Marc Gedeon joins us. Marc is the founder and principal at Gedeon Law and CPA. And Marc has a team specialized in cross-border taxation matters with an emphasis on tax preparation and planning for clients who work, invest, and conduct business in the United States and Canada. Marc, welcome back once again to the Three Questions Podcast. Great to have you. I really appreciate you making time for us.
You bet. Thank you for having me back.
Really appreciate it. Now, I'm sure our audience will be very interested and excited to learn more about Canadian and U.S. cross-border tax planning from Marc, and we're going to address today the three questions cross-border families should ask before purchasing Canadian-based life insurance policies. Now, you've heard me say this many times before, wealth management is multifaceted and very complex. For example, estate planning, risk management, and tax planning often intersect with each other. Ensuring your loved ones are well taken care of is a core principle behind estate planning, for example. So purchasing life insurance can be a great strategy to protect those you love if you were to die prematurely. Now, typically, as a rule of thumb, the proceeds from a life insurance policy are inherited by the beneficiary on a tax-free basis. But what about the cross-border families? Well, that's where it can kind of get interesting. And owning a Canadian life insurance policy as a U.S. citizen involves navigating both U.S. and Canadian tax laws, which can be complex due to the different treatment life insurance products are treated in each country. So that's why we have Marc with us today to help us with today's topic, which is three questions cross-border families should ask before purchasing Canadian-based life insurance. Marc, let's get right to the questions. The first question we're going to ask today of you is this: does the value of my Canadian life insurance policy need to be included in my U.S. estate or in my estate for U.S. estate purposes? And on top of that, how could that affect my estate tax liability upon death?
Yeah, well, I want to preface what I'm about to say by saying that when it comes to life insurance, it's probably one of my least favorite issues to deal with when it comes to U.S. Canadian taxes.
You've made that clear to me many times, Marc, as I will note.
Yeah. I think the question should be, why would anyone want to still maintain a policy, a cross-border policy, if you don't have to, or if there's really no way to undo it? Because I'll tell you, it's complicated, and definitely, there's surprises that people probably aren't even aware of and wouldn't even think of when it comes to dealing with life insurance. So, my main advice is work with, a good estate planning attorney, because you're going to need that as well, as far as estate, insurance and how it affects your estate. And a financial advisor, an insurance agent, and a CPA as well, in order to really determine what your options are for how to deal with these policies. And the sooner you deal with them, the better, because there are some rules as far as timing goes, as far as when somebody dies, and how those policies could be taxed. I believe there's a 3-year rule when it comes to somebody dying and having a life insurance policy. So, like I said, there's a lot of complicated factors involved with life insurance that the most practical advice I could give people is try to find a way to simplify your life. To go back to your question about estate tax, that's the death benefit could be included, especially when you're dealing with a foreign life insurance policy.
In this case, a Canadian policy.
Correct. You know, there are situations where a Canadian life insurance policy may be considered um, uh, equivalent of a US life insurance policy, so it would be subject to different rules, but generally speaking, if you do have a Canadian life insurance policy, it will be subject to uh, being included in your estate for estate tax purposes. And you know that means that you know if you're somebody who maybe you've got an estate of, let's say, $10 million, but then there's a death benefit of 5 million. Well, all of a sudden now
You're over the exemption limit.
you're over the exemption amount. So you know these are the kind of issues that you got to be aware of. But there's also more pitfalls, if you ask me, as far as owning these policies. And you know the death benefit and the estate tax is just scratching the surface, really.
I have a follow-up question as far as reporting. A lot of permanent life insurance policies come with what's called a cash surrender value, or CF or CSV. So on that note, if you're having to report to the IRS and you have a Canadian life insurance policy with a cash surrender value, does that cash surrender value have to be included on the annual FBAR report?
Yeah, and I'll tell you, obviously, when it comes to these sort of things, you want to err on the side of being conservative, and you want to report it on an FBAR. You want to treat it as a financial interest that you have, as well as your 8938. But I think one thing people need to be aware of that's even more onerous than dealing with the FBAR reporting and the 8938 reporting is, for example, reporting income from your policy. Canada's going to say, well, yeah, it's tax exempt. It can grow tax free, similar to a US policy, right? A US policy is the same way, it's tax free. But when you're dealing with a foreign policy, all of a sudden now, that income that's accumulating in your policy is subject to US tax. And again, I stress, I like to take a very practical approach. And I will tell you, from a practical standpoint, to how I deal with things, it is not easy figuring out the income that's generated in these policies. And if you've ever seen the annual, first of all, most of these insurance companies in Canada will only give you an annual statement, and it really doesn't have much information. It doesn't tell you, well, interest or dividends or capital gains. How do you know all this stuff? It's hard. It's not readily available information. So that's one issue that you're going to run into. And then on top of that, a lot of people don't realize this, but you also need to pay an excise tax on the premiums that you're paying for this life insurance policy. And it's a 1% excise tax, but still it requires work to figure out even what the premiums are, because a lot of times you may not even know your premiums because the policy generates the income that pays off the premiums, and you're not, like I said, I've seen enough policies to know some of this information is not readily available. And meanwhile, the IRS wants you to pay a 1% excise tax on the annual premiums you're paying into these policies. And then you got to file a form and you got to pay the tax. Again, it is not something you want to deal with if you don't absolutely have to, or if it's not part of some other type of bigger strategy involving your state, because it is complicated.
I think it's pretty clear that if you're intending on being a permanent long-term resident of the US, then you're probably going to think twice about your Canadian life insurance policies. Obviously, you want to don't leave yourself completely uninsured, but I think you're providing me with and our audience with a good tutorial on the risks of owning Canadian life insurance if you're living in the US. Now, I want to go on to the second question. So again, question number 2 is this: if I am a US citizen and a beneficiary of a Canadian life insurance policy, is it likely that Canadian or United States tax will apply on that death benefit? Because I understand usually with life insurance, the death benefit is always considered to be a tax-free asset, a tax-free benefit, no taxes.
Right, right. And again, I mean, there's a potentially a portion of the payout that's could be subject to ordinary income tax for US tax purposes. And again, you have to separate ordinary income tax versus estate tax, right?
Right,
They're completely different taxes.
understood.
And so, yeah, you could be subject to paying some ordinary tax on ordinary income, and you could be subject to paying estate tax on the death benefit. And going back to what you were saying about the Canadian side, so something else people don't realize is that, you know, if the person who dies and is a non-resident of Canada, or even if the beneficiary is a non-resident of Canada, you're going to have to go through what's called a certificate of compliance process in Canada to get the CRA to approve the insurance company to even pay out the policy. The insurance company won't pay it out unless you first go through CRA and get a certificate of compliance. So,
And that's a
there's going to be
process, not an event, I would imagine.
right, and then there's delays. I mean, for some certificate of compliance we've dealt with for real estate, for example,
Yes,
you
that
could
can
be
take
waiting
months.
6 months, 6 months minimum,
Yeah.
depending on certain factors and where.
That's been our experience so far with the clients that we've worked with,
Yeah.
sometimes a bit longer.
Oh,
So
yeah.
you're saying that that same timeline could be applicable for someone entitled to an insurance policy benefit?
Right, right, right. It's it's not like I said, it's not my favorite subject. And if there's one bit of advice I could give to people, it's like, especially, if we're not dealing with a big policy, right? Like, again, this is where practicality comes into play here, being pragmatic, as you mentioned previously. You got to take a pragmatic approach to this. If this is not a big policy, I would first thing I'd be doing is figuring out how to get out of it. Now, I know with some of these Canadian insurance policies, for example, if you try to cash out within a certain time frame, there could be penalties
Right.
for early surrender.
And you also have to take into consideration the insurability of the people in charge, because maybe after they bought that insurance, their health is declining and not insurable in the US.
Correct.
Then you got another, so
Yeah,
it isn't
that's-
cut and dried always, Mark, that you're automatically going to just say cancel the policy. Because
Correct.
step one is, are you insurable and can we get you coverage? So I think we don't want to jump into the deep end of the pool before we take that into consideration.
Yeah, 100%. And again, you also might be somebody who already is subject to US estate tax, right? You might be somebody who's already got US estate tax exposure, in which
Right.
case you are kind of relying on this policy to pay the tax.
Right, that you've subjected yourself to.
Exactly. So that's another reason why, okay, you may not want to cancel the policy. But again, like I said, practically, if I can, I would. If not, if there's other circumstances that prevent me from going down that route, then yeah, you're gonna have to deal with the issues that arise. And now there are things people can do, and I think a lot of times people will be like, well, can I gift or transfer the policy? Right? I'm sure you've come across that.
Well,
Right?
that's actually my third question. So you've segued perfectly into number 3 here. So
Oh, okay, perfect. Well, that's-
perfect. So the number 3 question here, again, assuming that as a US citizen, I transfer ownership of my Canadian life insurance policy or name someone other than my spouse as the beneficiary, will I be subject to US gift and I guess, or generation skipping transfer taxes? So well done, Mark, on the segue there for us.
Yeah, well, that's the answer is yes. I mean, when you do gift a cash surrender value policy and permanent life insurance policy, it will be treated as a gift. And you got to remember, there's issues and complications with who you gift it to. For example, if they're not your spouse, or if they are your spouse but they're not a U.S. citizen, okay? Because there's different thresholds that are going to apply as far as the amount of gifts you can make that would be tax exempt. So, that's something to be very aware of. Now, for people that have fairly significant policies that they choose that they're to maintain, and they have estate tax issues, that's where you want to speak with an estate attorney and set up what's called an ILIT, which is the Irrevocable Life Insurance Trust. These are very common. A lot of people will take advantage of them. And so, if the path you're going down is that you are going to maintain the policy, 100%, you want to work with an estate lawyer to handle the gifting of the insurance policy to the ILIT, and then obviously the ILIT itself.
Well, Marc, you've been with us now for the last 3 episodes. We've done a 3-part series on tax planning. We've covered, dual citizenship. We've covered taxation on retirement benefits. We've talked about life insurance. I've been wanting to have you as a guest for quite a while. It's been a while since we had you on. You're actually one of the original 3-question podcast guests that we had. So I've really been happy that you've been able to make some time for us today. Really appreciate it. As I've mentioned in the past, I can't imagine there won't be people listening in today or watching that are not going to have questions for you. As we've discussed in the past, the best way to reach you is by either email or by your website, right? Which is email is info@gedeonlawcpa.com. The website, the same, www.gedeonlawcpa.com. And if you could share us with the phone number, the 188 number.
Yeah, so it's 888-873. Sorry, hold on. 888-873. Oh my God, I'm drawing a blank. I guess I never call my own line anymore. 888-473-7967. So 888-473-7967.
All right, Marc, thanks a lot for joining us today. It's been great having you with us. Marc Gedeon, again, is my special guest today. He is the founder and principal at Gedeon Law and CPA. Great guest. Marc, thank you for making time to join us today. I look forward to seeing you soon.
Thank you.
I look forward to bringing you the 3 Questions podcast, and I hope you find them educational and informative. Please consider liking this video and subscribing to our podcast and YouTube channels. And to receive notification as to when our latest podcast has been posted, please click on the notifications bell. Lastly, to schedule an online Zoom consultation with me to discuss your wealth management needs, please click on the link in the description box below, www.onecapital.com/meet with Wayne. Thank you, and we'll see you soon.